Hi, my name is Mark Malero and I represent Qualified Plan Advisors. Today we're going to talk about the SRS distribution retirement plan highlights. So on the agenda today, we'll give you an overview of the retirement plan. So how does the SRS retirement plan works is what we'll be able to answer. We'll talk about the benefits of the plan and then how you can access your account through Fidelity. Now let's start off with the plan overview. Know that you're eligible to contribute into the plan as long as you're age 18 years or older. And the reality is you're actually automatically enrolled, saving 3% of your pay per pay period, but you have the ability to change that at any time, and that will go into effect 30 days after you start. But you can change it within that 30-day window or after that 30-day window. And you don't have to wait once a year to make changes. Again, you can make changes at any time. When you save into the plan, you will have the ability to save on a pre-tax basis or on a Roth basis. With the pre-tax basis, the money you save today, you get the tax benefit today, but then your money grows, and then at retirement, when you withdraw that money, you will have to pay taxes on that pre-tax money. With the Roth contribution, the money you save today, you already pay taxes on it today. Your money grows, and then you can withdraw that completely tax-free. So that's a great benefit. If you believe you're going to be in a higher tax bracket, Roth makes good sense. You can make both types of contributions or one or the other. It's really up to you. As far as the 2020 IRS limits, know that if you're 49 years of age or younger, you can save a total this year of $19,500, or if you're 50 or older, you can contribute and make a catch-up contribution, so you can contribute a total of $26,000 for 2020. Now, in your plan, you have a discretionary employer match, and you actually have two discretionary employer matches. One is given to you on a weekly basis, and this is 100% up to the first 3% per pay period. What this means is if you save 1% of your pay, SRS will give you 1% of your pay into your account from their back pocket. If you save 2, they're going to give you 2. If you save 3, they're going to give you 3. So now you've saved a total of 6% of your pay, and only 3% came from your back pocket. And you'll receive that on a weekly basis. The second discretionary employer match from SRS is considered the profit sharing year-end match. So anytime you save above 3% up to 9%, if you save 4%, 5%, 6%, all the way up to 9%, SRS will match half of your contribution. So if you save $1, they're going to give you 50 cents per dollar that you saved. Now, whenever we talk about the employer match, the other thing to take into consideration is the vesting schedule. And a vesting schedule, that's the ownership schedule, and that's important if you decide to retire, or let's just say you switch employers. This is where this comes into play. The vesting is a fancy word to say ownership. So if you're worked at SRS for 1 year, you are 20% owner of that SRS match. If you've worked at SRS for 2 years, you're 40% owner. For 3 years, you're 60% owner. 4 years, you're 80% owner. And then once you've worked there for 5 years, now you're 100% owner of the SRS employer match. Again, you are 100% owner of the money you save from your back pocket into the account. In addition, in the plan overview, know that you can take out withdrawals or hardship. And typically to take out a withdrawal, you have to be 55 years of age or have 5 years of service or be 59 and a half. And there are hardship rules in order to take out a hardship. And then you also have the ability to take out loans. So know that that is an option, and you'll work through Fidelity to take out withdrawals or loans. In addition to this, the other thing, whenever you set up your 401k account, you want to make sure you set up a beneficiary. If something were to happen to you, who's going to receive your money? And so having a beneficiary on file with Fidelity is going to be the easiest way to help the loved one take care of that. Know that you can receive account statements. The account statements, by default, you'll receive them on a quarterly basis online. If you want to receive them in person, in paper, you can have them mailed to you, but you'll have to contact Fidelity, whether it's through the website, you can set it up that way, or you can call them over the phone and you'll have to ask them for them to send you a paper statement. But know that that is an option for you. Now, let's get into the benefits of the plan. And in one of the other videos that you've probably received, we talk about the 401k plan basics. And the reality is the reason that you have a 401k or a retirement plan is it allows you to replace your current income today once you're in retirement, so you can either not work less, or focus on all the other fun hobbies that you're interested in while you're in retirement. So no, that's really the goal and the benefit of the 401k plan. The other benefit is having the tax benefits. So we'll talk more about that, and then the employer match. With the inside the plan, you have the ability to make what's called a pre-tax contribution or a Roth contribution. You can do both or one or the other. Whenever you save in a pre-tax basis, you get the tax benefit today, then your money grows, and then when you withdraw that money, you'll have to pay taxes on that money that you saved on a pre-tax basis. With a Roth contribution inside your 401k, you pay taxes today, your money then grows tax-free, and then you can withdraw that money completely tax-free. Again, as a reminder, you have one 401k account with two types of contributions you can make inside the one account. Now, if we take a look at this paycheck, somebody saving into a pre-tax account, we're assuming that they're earning $40,000 per year and that they're in the 15% federal and state tax bracket. So somebody's getting paid bi-weekly, so every 2 weeks. Their paycheck's going to amount to $1,540. We rounded a little bit there. And if they save 3% on a pre-tax basis, they're saving $46. So that $46, that's the money that you're not going to have to pay taxes on today. Once it's all said and done, your take-home pay will be $1,270 in this pre-tax scenario. Now, if you were to save 3% on a Roth basis, looking below, you're still going to save $46 per pay period, but you're actually going to have to pay taxes on that $46. So now your take-home pay is only $1,263 per paycheck. So you notice that $7 difference. The reason you get more on the pre-tax is, again, you're not paying taxes making pre-tax contribution. But reminder, you will have to pay taxes once you withdraw that money in retirement. So just take that into consideration, but that is the tax benefit. And again, you have two available options for you. The other benefit, we talked about this a little bit, is the employer match. So we came up with an example, and you guys have two discretionary matches. This is the first discretionary match where you received 100% up to the first 3%. So if you save 1, 2, or 3%, SRS will match 100% of your contribution. Let's say that you earn $40,000 per year and you save 3% per paycheck. Let's say you get paid on a weekly basis. You're saving $23 in that paycheck this week. And let's say you're saving it on a pre-tax basis. It only affects your paycheck by $18. So you're saving $23, but you're only seeing a difference in your take-home pay of $18. Your employer match will be $23 as well. So again, they're matching you 100% of that. So the $23 you save into the plan plus the $23 that SRS gives you into your retirement plan, you're going to have a total of $46 into your 401k account. But it's only going to affect your take-home pay by $18. So that is a huge benefit. You save $46 into your plan and you're only seeing a difference of $18. That is automatically a return for yourself. Now, let's talk about the discretionary match number 2. And this is actually calculated at the end of the year, and it's contributed at the end of the year based upon the profits of SRS at the organization. So let's go back to this example. In order to receive this, you know you have to save anywhere above 3%. You have to save anywhere from 4% through 9%. And SRS will provide you or will give you half of your contribution. So in this example, let's say that you save 9% of your pay per pay period. You're saving $70 per week. Now, if you're saving this on a pre-tax basis, you get the tax benefit and it's only affecting you by $55 per week. It's a great benefit. And Know that you're still going to receive the $23 per week on the first discretionary match. So you receive the dollar for dollar up to 3%. And then this is where the secondary match kicks in. You're going to receive 3% employer match anytime you save from 4% to 9%, which is a total of $23. So if you add that all up together, you're going to receive the $70 that you save from your back pocket, the $23 on the first match, the $23 on the second match. Know that that match will be contributed at the end of the year. And you're saving a total of $116 into your 401k, but it's only affecting your take-home pay by $55. That is a huge benefit. So we want to make sure if you're not taking advantage of the employer match, that you take a look at this. Again, there's two matches. The first one is up to 3% dollar for dollar match, and then the second one is from 4% to 9%, and that's 50 cents on the dollar. Hopefully you're taking advantage of it. If not, seriously consider it. I'm sure you're probably wondering, how do I access my account with this great benefit? You can contact Fidelity through their website, 401k.com, set up a username and password. They'll ask you for your social security number and your date of birth, so those two things. Or you can also call the 800 number, 1-800-835-5097. They'll ask you for the same information as well. So my name is Marco Malero. Thank you so much for your time. And here's my contact information. We hope you listened into the other webinars as well. Take care.